Hello and welcome to our continuation of our video lectures for Chapter 2. We are going to continue with our learning objective number 2, and we're going to continue to go through all of the transactions. So for example, on July 16th, we subleased a portion of the building to a jewelry store. We received $1,000 in advance, and again for the first 2 months, and the rent begins on July 16th. So in this case, we are doing an accrual. We're recording the cash, and then we're recording a credit to the deferred rent revenue because it begins on the 16th, and today is the 16th, so we have not earned it. We will earn this revenue through the passage of time. Now, on July 20th, we actually paid our $25,000 on account. Again, consider what happens to cash. So in this case, we are paying cash, so cash decreases. And since we previously recorded it on account, we are debiting accounts payable. Moving on now, we paid salaries to employees for the first half of the month, which is $5,000. So again, cash, what's happening to it? We paid it, so it's decreasing. It's a credit. And then we're recording the salaries expense for our period because we paid our employees. Now we received $1,500 on account from St. Jude's. So since we received money, cash is a debit, and then since it's on account, we know that this is accounts receivable. So we are crediting our accounts receivable. Now on July 30th, we paid, so again, what's happening to cash? We paid shareholders a cash dividend of $1,000. So since we paid, cash is decreased. And then cash dividends, we're recording it to retained earnings here, but you can also record it to dividends or dividends declared. So that's not as critical at this point, just realize that it's hitting retained earnings. Because remember, we had beginning retained earnings plus our net income minus our dividends equals our ending retained earnings. So just remember that for our statement of stockholders' equity.